Adrian Mowat, who's joining us this morning. Adrian, great to have you with us, particularly the day after quite a heavy sell-off. Some nervousness post-budget, particularly on perhaps how that surcharge on the super rich may impact FPIs and sentiment with regards to flows into India. Want to get your takeaways with regard to that, just to start off with.
Yeah, so I think there's a couple of factors to look at here for the markets. We've got a global issue, which is expectations around Fed cuts were impacted by the employment data that came out of the US, which was very strong, the best we've seen so far in 2019. So global markets are coming off. The budget was, a prudent, a fiscally sensible budget for a government that's just won a strong mandate, with little in it that would provide a short-term boost to earnings and to the market. And then as you look through the details such as decreasing the maximum holding that promoters can have in stocks, some of the taxation issues, then the interpretation is there's a degree of an overhang or an inability for some of the wealthier people to invest in India in a tax-efficient way. So I think we've had a good rally in markets, whether it be global markets, the Indian market, and we're having a degree of sell-on news. I wouldn't overplay some of these factors that came out of the budget. I think they're relatively modest near-term impacts rather than something that impacts the medium-term story for India, which, in my view, was helped by the budget because it was fiscally prudent.
Adrian, there is a sense that, the consumption slowdown, and, we're also heading into earnings and already starting to see that commentary coming in from some companies, of course, given the past quarter, and seeing that hit coming in on the back of the slowdown. Now, the budget has provided stimulus on the monetary side. They've tried to use monetary measures, which may or may not actually, A, be transmitted, B, it might take a while. We are expecting rate cuts, but, we're still waiting on that. Do you feel that's going to be enough to really get things going again, or do you see a prolonged period of pain perhaps on the back of this slowdown?
Well, remember that the budget, in trying to be fiscally prudent, will be a drag on the economy. Now, you've got the Reserve Bank offsetting that if they continue to ease. And so I think this is a sensible way of dealing with the challenges within the Indian economy. The problem for the market is that there isn't incremental good news coming out of the budget. We've had a good rally in Indian equities, predominantly driven by an election result that was much better than the market was expecting, combined with a rally in US equities, which was driven by good economic data as well as a much more dovish Fed. And perhaps now we've sort of gone past that optimum point in markets where good economic data now is interpreted as a less accommodative Fed. So we've sort of passed this sweet spot. Markets are probably due for a bit of a correction, and that's what's occurring at this point in time. Now, with regards to the Indian economy and consumption and business investment, I don't see there's any near-term positive drivers for consumption. The Indian consumer isn't overly sensitive to interest rates. There are other factors that can be more dominant within the Indian economy. Now, some of the things that came out of the budget may increase the propensity of countries or global organizations to invest in factories in India and other services. And that might, in the longer term, help consumption, but nothing that's really going to have an impact over the next quarter.
Right. What do you make of some of the stocks like Bajaj, today Titan, some of the other so-called stock where people were finding some hiding area here into India? When these stocks start to correct, what happens?
Yes, so I think you're referring to Bajaj Finance, right? Which has been an outstanding performer year to date. I think it just fits in with my previous comment, which is markets have had a decent rally. Investors are looking for excuses to take some profits, and you will see corrections in the stocks that have had the biggest move. This is a normal event in capital markets rather than one to get overly excited by. So probably further downside risk for these stocks as investors reduce positions. but I don't know if it is going to tell us that there is a profound change in the investment case for these stocks. I don't think there is. I think it's merely a correction in these markets.
We're on the financials, Adrian. Given the kind of rescue package that was announced for NBFCs, how are you viewing that? Do you feel that it will ease some stress in the system, that you're happy that they actually addressed it? Or do you feel that perhaps it was just covering up for some of the mess that's already been made in the lower quality names?
Yeah, so we've got the NBFC issue and we've also got the PSU bank recapitalization issue. The way that the analysts are interpreting it is, yes, there is good news in that more capital has been provided. However, it looks like it's close to the minimum requirement rather than being a sum of money that resolves the issue for the longer term. So I think we will continue to be discussing issues with non-bank finance companies. We'll be continuing to discuss issues with undercapitalized PSU banks. Now, we have had some change in the regulations, as I understand them, particularly of housing finance companies. I think the market will probably treat that as a positive thing in that the regulation maybe gets more robust, more homogeneous across the different types of institutions. And that's probably a good long-term fundamental news story for India.
Mark, what Titan is up to in trade today. It got off to a very shaky start and it's continuing to sell off. The company, remember, saying that they've seen a tough macroeconomic environment. Consumption has been hit. High gold prices in June as well has impacted the jewelry industry. Brokerages are downgrading the stock. They are lowering the target price, and that's the stock currently trading at 1119, down 11% in today's trading session. Adrian, in fact, speaking about the overall consumption theme, reports indicate that the overall rural slowdown as well is likely to lead to a massive deceleration, and recovery is going to take time. We're hearing sound bites, be it from the likes of Bajaj Finance or even a Titan. How are you reading into how long the overall consumption slowdown is going to take to recover?
So what would change the consumption slowdown? So you need to boost rural incomes. You need to do things to improve urban real incomes. Now, what could happen here is clearly the crop could be better than expected if the monsoon is better than expected. And at the moment, the news flow out of the monsoon is probably more on the negative side. There is no indication out of the budget that you're going to see an increase in minimum support prices or a big increase in subsidies into rural India. So it looks like we're going to be still weather dependent there. I think for urban India, it's whether the fact that we've got more political certainty, we've had a prudent budget, that there have been some positive measures to make FDI easier into India, that job creation proves to be more robust over the next 12 months. And it's that actually boosts the incomes of the household sector, which allows consumption to recover. Now, as an equity investor, the whole consumption story is very frustrating at a market cap level. Remember, a huge amount of the consumer discretionary index is the auto names. And with the move to electric vehicles, you've got a really nasty gap in the demand for automobiles for the next couple of years. What is happening globally is that individuals that own cars are owning them for longer as they wait for the new technology to hit the right price point, which would then generate a replacement cycle. We're seeing this throughout capital markets, whether they're being in Germany, United States, United Kingdom, Japan. The auto sector is under extreme pressure. And that is a big way that you play the consumer discretionary theme. Remember also that autos will drive consumer financing. Auto financing is a big part of the finance industry beyond mortgages. So I think the consumption story, as you play it in capital markets, is going to be quite frustrating because so much of the market cap is being hit by this secular technology story. as opposed to a cyclical up and down in consumption.
Adrian, I just wanted to get your perspective on the sentiment in the market. Now, if you look at a stock like Titan, it's down about 10% at this point of time. They have missed their operational Q1. As you said in the start, are most of the people just finding a reason to sell any of the large cap counters where they have made money?
Well, let's be careful here how we comment about these things. We're talking about a market that's done very well year to date, and we've had a correction on Monday, and that correction is continuing today. So before we decide that this is a medium-term trend, let's be conscious about the time frame we're talking about here. Now, we do have concerns around consumption, but it sounds to me like the Titan story is a very specific one. Stock has performed well, expectations were above what the company can deliver, and their announcement is being quite sensibly treated as a reason to reduce your position in the stock.
Some of this in together, Adrian, in terms of what you're expecting on flows. A lot of factors, as you also pointed out earlier in our conversation with regards to what's happening with the Fed and the kind of bond market sell-off that people are now starting to talk about when it comes to Wall Street. Here, we've had the government in the budget really talk about overseas borrowings. We're seeing the kind of glide path look relatively better here compared to what we're seeing globally. Do you see more flows coming in? What's your outlook also when it comes to the debt side?
Yes, so I think that the near-term outlook for flows is going to be quite poor. We are seeing a correction in global equities after a strong performance. We have had a rapid decline in bond yields for much of the year to a level where you ended up with a funny shape in the yield curve. As the investment community pays more attention to the US economic data, which remains very robust, as was demonstrated in those employment numbers, which are undoubtedly some of the most important numbers you should ever look at in an economy, particularly a consumption-driven economy, then the outlook to me is higher bond yields, maybe a more normalization in where bond yields are. And if that's the case, then you're going to get some broader pressure on credit markets, including emerging market credit markets. So I would be cautious on flows as we move through the summer months. And it could be a very sort of normal seasonal pattern where you get the rally being powerful in the first half of the year, you get a correction during the summer months. And then as people start to think about the following calendar year, September, October, you begin to get some recovery in markets. So do be cautious about expecting international capital flows to underpin markets. I don't think that that is going to be the trend.
Observation. I request you to stay on with us, Adrian. I just want to